at the moment we're seeing tons of nudge letters going out to people because they're desperate for more revenue, whilst at the same time trying to push people out of the tax return system. Welcome to the Tax Compass podcast, navigating UK tax for expats with LSR Partners. Welcome back to the Tax Compass podcast from LSR Partners with me, Simon Roue, and my business partner, Laura Sant.
Hi.
Today, we're going to be talking about the basics of the UK tax system. We cover a lot of different topics on this podcast, but it struck us that we haven't actually talked about the first things you need to know about the UK tax system, like its bonkers tax year end, which Laura will talk about in a minute, right through to self-assessment. Some of the things you need to think about if you come into the UK, although quite why you do that is anyone's guess in the current situation. But this isn't a political podcast. This is a tax podcast. So we'll crack on with talking about the tax year. Laura.
The UK has a bit of an odd tax year compared to the majority.
She's so polite.
Compared to the majority of other countries. An awful lot of other countries have a calendar tax year starting 1st of January to the 31st of December. The UK, I think it follows the Georgian tax or the Georgian.
Is it Georgian or Gregorian, something like that?
Could be.
Something to do with popes, probably.
Yes. So it's the 6th of April to the following 5th of April. Quite why we've stuck with that, I don't know.
Because we can't change anything in this country. So changing the tax year to something that makes sense would obviously be completely out of the question.
Yes.
They can change tax rates upwards. They're quite good at that. But that's another point again.
But tax brackets, no, they have to stay put.
Exactly.
So the tax year sits differently to any other tax year. I think as well it's worth noting that for a lot of countries you have to file.
There's always some sort of filing requirement that people have to do themselves.
Yeah, at the end of the tax year. And in the UK, that's not necessarily always the case.
I think I was reading somewhere that of the 30 odd million taxpayers in the UK, only about 6 or 7 million people end up doing an actual tax return themselves.
Which makes sense. And actually, I would say that HMRC are actively trying to push people out of the tax return system, which I can understand why they might want to do that. But the downside to them doing that is people aren't necessarily aware of additional, like they're thinking, I don't have to file a tax return, that's great. But actually they might not necessarily realise that they maybe have to reconcile their position slightly outside of the tax return system. For example, say you've got an additional rate taxpayer. Historically, if your income levels were above £100,000, you had to file a tax return. You had to report your position because your payroll was always out of kilter because of the loss of your personal allowance. Any interest that you received that had taxes owing would get picked up as part of that process. You'd pay your taxes. Now, because HMRC aren't putting a limit as to your income levels, they are asking, like you're not necessarily having to file a tax return. Your interest levels will be taxable. And unless you're reporting that to HMRC, chances are you're probably doing something a little bit wrong. It's
weird, isn't it? Because we see this so often with clients. It's like there's very limited guidance in terms of really what you need to be doing. I was speaking to a client yesterday who's been in the UK since 2017 from the US. He's a US citizen, thinks he's taxed in the US on his US income, had no real idea that he was also taxable in the UK but wouldn't be double taxed. And it's like he was like a senior executive. And it's like for people like that not realising, and there's not really that much guidance, but at the same time, HMRC are so incompetent, frankly, when it comes to trying to sort out the number of people they've got. You're in this weird situation where at the moment we're seeing tons of nudge letters going out to people because they're desperate for more revenue, whilst at the same time trying to push people out of the tax return system. I mean, the whole thing is a bit round backwards, isn't it?
It is. We've had real difficulties getting certain people registered for self-assessment this year, where maybe they're owed a refund from HMRC. So HMRC do. One of the positives, they do have a tool where you can check whether you need to file a tax return. I think if you just search that, it will come up with the tool, and it will ask you questions about, the income sources that you receive, whether you've got self-employment, rental income,
foreign income, whatever.
Foreign income, but if you need a refund, there's nothing like.
Yeah, they keep that quiet, don't they? Yeah, absolutely. And I think the other thing it's probably worth mentioning is a bit around how PAYE works and coming back to that point that you were just saying about the fact that not everyone has to file, and that's because of the way the PAYE system works. You just want to cover that in a bit more detail.
Yeah. So with your payroll, a payroll operates on a. I mean, it can operate on a weekly basis, but most places will tend to operate
monthly,
payroll on a monthly basis. Assuming it's monthly payroll, the way that it will work is unless you're on kind of a month one code, if you're on a cumulative code, then effectively HMRC or the payroll provider will make an assumption that whatever you receive in that particular month is what you're going to receive every month. So effectively you receive 1/12 of any personal allowance that you're entitled to, any basic rate bracket, any
and they'll assume that your salary is 12 times what you get in that month.
Yes.
So do you just, and this is an interesting point, so do you just want to talk about what we've had a problem with in our business in terms of paying bonuses in April?
Yeah, so if you pay bonuses in April, for example, or you get a one-off larger lump sum payment, then
in April,
and especially if
April's
it's
the
in
month
April,
that's a problem, right?
Because of the fact that it's the first month of the year and there's nothing else kind of to offset against, effectively HMRC will assume that that is the amount that you're going to be receiving for the remainder of the year, and therefore every month. So say for example you're a 20% taxpayer, and if you're receiving a lump sum payment, that could well end up pushing that bonus into the 40% tax bracket, or even if you're really lucky, possibly even into the 45% tax bracket. What will then happen, again, this is on the assumption you're on a cumulative code rather than a month one code. What would then happen is in future months, they'd take into consideration the fact that you've already had this lump sum payment, and they'd almost like do a look back. Yeah. So they'd say, right, well, so maybe you're a 20% tax bracket payer this in month two. In month one, you paid some in the 40% tax bracket, but you've got X amount of unused 20% tax bracket. Let's kind of so on the face of it, it should reconcile if you're being employed for the whole of the tax year. I suppose we're talking primarily about people coming into the UK and being UK tax resident, but when you have people who are leaving the UK and breaking residence midway through the year and they're being on a payroll until maybe 6 months of the year, this is where people end up overpaying taxes because they have only received 6 months.
Yeah, so it's important to specify that personal allowances aren't proportioned. So you get a personal allowance of 12,570 even if you only do 1 day's work in the UK.
Well, assuming you're a UK tax resident.
Yeah. Yes. But what I mean is that point around the payroll is you do 6 months and you've actually paid as if you were going to get 12 months. So you'll have overpaid tax.
Yes.
But when you tot it up at the end, let's say you earn, 120,000 quid, because that makes the maths easier for my small brain. You earn 120,000 quid in a year. That's your annual salary. You leave after 6 months.
Yeah.
You'll have been taxed at 40% and then some at 45%, and you'll have lost some of your personal allowance.
Yeah.
But because you actually only got paid £60,000, you're actually entitled to your whole personal allowance again, and you'd have only paid tax of 40%.
Yeah.
So then that is something that you have to make sure you reconcile. And I guess it's worth pointing out that if you leave your job when you leave the UK, HMRC should be able to reconcile that. It's worth filling out a P85 form to tell them that you've gone, so that they will reconcile it.
Definitely.
And send in your P45.
But unless there's any other reason for you to file a return, you don't actually have to file a return.
Yes.
So you get that reconciliation.
And that's another point, actually, on the reconciliation point, because we sometimes get clients, don't we, who come to us and say, I'm a bit worried that I may not have paid enough through payroll or whatever. Am I going to get into trouble? And it's like, no, you're fine, because there's a system, a PAYE system at HMRC that will reconcile it, and you'll get a statement a month or 2 months or whatever after the end of the year.
Exactly. So you have your PAYE system from HMRC. You have your tax return system from HMRC.
And do they talk?
No. Well, they do occasionally, but it's one of those where...
If we wait for half an hour on the phone to ask them to.
Yes. So if it's one of those where if you do need to file a tax return, you have to tell HMRC that you need to file a tax return, because if not, what will happen is you'll file your tax return showing what other income it is that you've got and what taxes are owing. But if you haven't communicated that you need to file a tax return, the PAYE system is going to reconcile your position. And what you may end up in is a situation where, for from a PAYE perspective, you overpaid taxes. And so that reconciliation's happened and they've issued you with a refund. And then you filed a tax return saying, well, I've overpaid taxes, but you've still got that refund. And it's
And can you tell them that online?
That you need to file a tax return?
Yeah.
Not at the moment, I believe. I mean, it's one of those where you can, if it's the first year you're doing it, you can kind of fill in an SA1 form to say, I need to get set up and I need to file tax returns and this is why. But certainly from our perspective, we're not in a position to be able to just tick a box to say, yeah, we need to file a tax return. What
we've tried to do in the past as well, though, is to say this is an unsolicited tax return, please put it in the system. But it's never quite clear, is it, whether that works? We had a client last year, I remember, who had done self-assessment in the past, so was registered, as you say, because he couldn't do an SA1 route because he was already set up. Had some trust income that he'd received, and we were in this bizarre situation of sending in a tax return where he owed HMRC 20,000 quid or something, and then HMRC sent him a reconciliation of his payroll saying they owed him 400 quid, and the two systems just hadn't talked to each other. Which is pretty shocking, really, when you think about the fact that the whole point of having, well, I suppose again this is the thing, right? So you have your national insurance number, but then the tax return works off a different number. And so because you don't need a UTR to be able to be on a payroll, they don't need to talk to each other. And I mean, you wouldn't have thought it would be beyond the wit of a government agency to say, why don't we give everyone a unique number for tax and then have the whole system work? But then again, we deal with the NHS. So, I mean, why would we think the tax system is going to be any better? What else should people be aware of? I'm just trying to think about oddities.
So, well, I suppose in terms of the tax return system, because if people do need to file tax returns, it's worth being aware that you have, in general, up until the 31st of January to file your tax return, assuming that you're filing it electronically. So that's about 10 months to reconcile your position. Which
is quite a long time, actually, compared to a lot of countries, isn't it?
It really is. Unfortunately, as we've seen quite often, people will tend to go, yes, I've got 10 months, but let's leave it 9 months and 2 weeks before we actually start thinking about the tax return position. I am very much an advocate of get your information in as soon as possible. Know where your tax position is as soon as possible, because even if it is I'm going to have a horrible tax liability, surely it's better to know where your position is and make sure you can then plan how you're going to make.
Yeah, but the ostrich approach is quite nice, of just burying your head in the sand for as long as possible. I can buy into that to some degree. I think though, on that point, what's often a misconception is that, and I wonder whether this feeds into why people don't do it so early. You can do your tax return on the 7th of April. You don't have to pay the tax until the 31st of January. So it's like, to your point, it's like find out what you owe.
Yeah.
And then you just put a reminder in your diary to pay it as. I mean, I did a capital gains tax return personally the other day, and I had I'm not giving them the money until the day I need to give it to them.
Yes.
But then I'd done the return before, right?
Yeah. The other thing when we're talking about paying tax bills, if it's, for example, your first year in the tax return system, or if it's the first year where your tax liability's over £1,000, it is worth just pointing out about payments on account. So if you're, again, it's one of those where if your liability is more than £1,000, and if you've paid less than 80% of your tax at source, so through your payroll or whatever, then HMRC will go, you now fall into payments on account. What that means is, say, for example, this year you had a liability of £4,000. They'd say, well, we're going to assume that next year's tax return is going to generate a liability of another £4,000. So they split it up and they say, alongside the first liability that's owed on the 31st of January, of £4,000, you're also going to have to pay the first payment on account. So you're going to have to pay 50% of next year's liability too. So another £2,000. So the 31st of January bill is £6,000. Then you have to pay the next payment on account by the 31st of July following that, another £2,000. And then assuming that your liability was £4,000 for the second year, then you wouldn't actually have to owe anything by the 31st.
You wouldn't have a balancing payment. No. So the first year is always painful because you have that 6,000. Yeah. But then if you followed it around and that was always the thing, you just end up paying 2,000 every 31st of January and 31st of July.
Yes.
And I suppose I get a bit frustrated sometimes with payment on account, but then when you think about it, you're actually making the first payment 9 months into the tax year to which it relates, and the second payment is 3 months after the end of the tax year to which it relates. So it's not actually that bad. But you have to be, we have clients, don't we, who are a bit of sort of sticker shock.
Yes.
When they see the tax bill and they're like, why is it so massive?
Yeah.
It's probably worth mentioning, though, you can apply to reduce them.
Yes. So you can do that if you are expecting your liability to come down. We have people who maybe are self-employed, but they then leave the UK midway through the year. So actually, maybe their self-employment income will sit within their personal allowance. They're not going to have a tax liability. So you can look to reduce it all the way down to nil if you want to. HMRC are going to definitely charge late payment interest if you reduce the payments on account too low. But conversely, if you end up overpaying your payments on account, and then when you do your return realise that you've overpaid them, HMRC will lower those payments on account down. So to put some context into that, say your tax liability for this year was £4,000. You pay the 2000 31st of Jan payment on account, 2000 31st of July payment on account. You then do your tax return after the 31st of July and realise that your tax liability was actually £3,000. From HMRC's perspective, what that means is they would lower your payments on account, because the payments on account are literally that they're a payment. They're not actually saying this is what your tax liability is. So your payments on account would be reduced to $1,500 each, and therefore you would have prepaid you'd have overpaid both of your payments on account, and HMRC would issue you with some interest. I mean, it's less than the interest you'd have to pay them if you get it the wrong way around.
Well, especially they've changed it, right? So what is it for HMRC? Have to give you, is it 1% below the base rate? Oh, I don't know what it is on that side, but I know that the interest you have to pay them changed from the 6th of April this year, and it went from 2.5% to 4% above the base rate. So the point is that you can fiddle with your payments on account, but you'll pay interest if they have to be half of what the previous tax bill was.
Yes.
I was having fun and games with the disclosure the other day, having to figure out interest for however many years it was, and it's like, was it last year's payment on account, this year's payment on account? How do I figure out what the payment on account is? All the rest of it. It can get a bit complicated. Just circling back to payroll, because another often a misconceived point around payroll, and this again is relevant in our business because we have a lot of clients who go overseas. I was speaking to someone yesterday who's moved to Singapore, and we were talking about his split year treatment that he's going to have to do for 24, 25. And he went to Singapore at the end of July, but only moved payroll from UK payroll to Singapore payroll at the end of September. Do you just want to cover the issue that creates? So
the major issue that creates is because, assuming that you break residence from July when you leave the UK, if you remain on a UK payroll, starting point is that you're going to remain taxable through the payroll, and you'll have UK taxes withheld for the period July to September.
In the August and September payrolls in his situation.
Yes. But if you are actually a UK tax non-resident and you are working outside of the UK, the income is considered sourced to where you're physically located rather than where your employer is located. So again, you end up in a situation where you will have overpaid taxes. And realistically, unless you were to get a P85 sorted straight away, you're going to have to reconcile your position through a tax return. That's something that if you were to come off a UK payroll, leave the UK, P85 should sort it out, and you don't have any other reason to file a tax return.
Yeah, if you come off the payroll, like when you leave a job, because you, by definition, you're going to be, one assumes, you finish the last day, then you leave the UK, then it'll work. But if you're switching location with a company, you really do have to think about whether or not tax return is the way to do it.
Yeah, and I was going to say the way to reconcile it that way would generally be through a tax return. And the other thing that you also then need to be thinking about in the future is, especially if you're working for a larger, multinational company, you've got maybe employment-related equity, bonuses, etc. You've got trailing income that you then always need to think about in terms of they'll do any.
Well, actually, you need to get us to think about it so we can do your tax return.
Obviously, but you'll have a situation where the company are likely to apportion it based upon payroll, so based upon a departure date in September, whereas the reality is it should be apportioned to. And
this is a real takeaway, right? So we have this bizarre situation in the UK where, as we said, 30 million taxpayers, give or take, 6-7 million on tax returns. And you're led to believe that if you're on PAYE, everything will be sorted out for you. You don't have to come into the tax system. And as you said at the beginning, HMRC keep going down that route of saying, we want to take people out of the tax return system. And then how many examples have we just come up with where the PAYE thing doesn't work?
Yeah.
And so then, and I'm obviously cynical. If that hasn't come across in this podcast yet, I don't know what I've been doing wrong. I'll keep working on it. It is this element. I can't help but think it's this element of people going, or HMRC, it's like, how can we avoid having to give people tax refunds? How can we make it as opaque as possible as to what the situation really is?
It certainly, to me, as somebody who's
less cynical.
Well, I'm with you on this particular point. Now, I've the past 12 months has been really interesting. It used to be a case of we need to get a tax refund for this reason, and you'd get a UTR, and they're really putting up resistance in a lot of instances where that is the case, which is just painful. And the thing is, and this is where...
But it's painful and wrong because... And that's what frustrates us a lot, right?
Yeah. I think as well, from our perspective, some of the other routes to obtaining a tax refund, your DT individual form,
I was just thinking of that.
R43 forms, etc., you submit them and they take months, if not potentially in some instances years to deal with. Whereas you do a tax return... self-assessment, you submit it, assuming that there is no reason for them. They might undertake additional security checks, but unless they do that, it's 2 to 4 weeks to get a refund. It goes straight into a bank account. Quite often with some of the other forms, you need to have checks. People living outside of the UK, like trying to get them a check, it's really difficult. And therefore, actually, the tax return system, because it's online, it's electronic, there's a process, it's a lot easier to do. So again, this is where it's really, really, it's just obstacles to get people sorted.
Yeah. So look, I guess the takeaway from this is it's really good, especially if you're coming into the UK, to get some advice as to what your position is likely to be and get ahead of it. Because to your point, ultimately it's like saying to people, get in the tax return system, because then it gives you that ability to get refunds much quicker. And ultimately you can say, I'm going to have some income. I might be renting out a property to get a UTR, and then you've got them.
Yeah.
But like we had with some, and again, this is where I get really quite angry about it. It's like, we've got a couple who are based in Barbados, they're pensioners. They put into the UK system, they work for the NHS, they retired, they shouldn't be being taxed on their NHS pensions. And HMRC are doing absolutely everything they can to avoid having to give them refunds. And that's just really, really bad, because it's like, well, hang on a minute. It's very straightforward that this isn't taxable in the UK. You've been withholding it. And again, when it comes to moving around countries, a lot of people these days retire overseas for obvious reasons. And, that whole business of sorting out payroll on pensions and all this sort of stuff, it's just, as you said, in the last 2 years, it does feel as if it's become noticeably worse, right?
Yes. And we've got making tax digital for income tax being introduced shortly as well, which is
another massive can of worms, which we're not going to go into now, I can tell you. Look, so I think that's probably a decent summary of all the points around sort of PAYE and the tax return system. And the key for people coming into the UK is get some advice, figure out exactly what your position is going to be, get into the tax return system if you need to be, because it's always better just to be more proactive around this stuff and go from there, right?
Most definitely. And I think as well, because of the fact that we focus primarily on expats, so people who are coming into the UK, if you have income outside of the UK, it's really important that you think about it. Don't just assume that it won't be taxable in the UK.
Yeah. So if you're planning to come to the UK, for some reason best known to yourself, then it's really worth getting in touch with us to make sure you know exactly what your situation is, what you have to do, what you should be registering for. And it's always better to be proactive on these issues, and it'll save you in the long run.
Thanks for listening to the Tax Compass podcast, brought to you by LSR Partners, where we help you pay the right tax in the right place at the right time. Book a call with us. Details are in the show notes.